Welcome back to the show. Today, we are diving into one of the biggest players in AI technology, NVIDIA, NASDAQ, NVIDIA. If you've been following the stock market, you know that NVIDIA has been on a historic run, reaching new all-time highs. But with such a steep climb, investors are asking, can NVIDIA stock continue its upward momentum, or are we hitting a peak? How should investors interpret the latest Q1 2025 earnings report? What are the biggest opportunities and risks ahead for the company? We'll break all of this down today, so stay tuned for a deep analysis on NVIDIA's stock performance, earnings, industry competition, and future prospects. Let's start by reviewing NVIDIA's stock movement and how the market has responded over the past year. Current stock price, $850. Up 3.5% this week. Year-over-year gain, plus 65%. Market cap, $2.1 trillion. Over the past 12 months, NVIDIA stock has experienced explosive growth, fueled by the surging demand for AI computing power. The H100 and H200 AI accelerators are in high demand, with tech giants like OpenAI, Microsoft, and Google all rushing to secure NVIDIA's cutting-edge GPUs. From a technical analysis perspective, NVIDIA broke through the $800 resistance level in January and is now consolidating around $850. The key support level currently stands at $820, which has historically acted as a strong buying zone. Short-term resistance is near $875. And a breakout above this level could push NVIDIA toward $900 and beyond. But the key question remains, is there still upside potential, or is NVIDIA nearing a saturation point? To answer this, let's take a deep dive into NVIDIA's latest earnings report. Now, let's analyze NVIDIA's latest earnings report, which has once again exceeded market expectations. Key financial figures: total revenue, $26.8 billion. Yield growth, plus 52%. Net income, $12.5 billion. Yield growth, plus 66%. Data center revenue growth, plus 80%. One of the biggest highlights from this earnings report is NVIDIA's data center business, which now contributes 75% of total revenue. This shift is a clear sign that AI infrastructure, rather than gaming GPUs, is now the company's primary growth driver. New developments: NVIDIA has announced the launch of the Blackwell AI chip, set for release in 2025. This next-generation chip aims to solidify NVIDIA's leadership in AI computing. With AI adoption accelerating globally, NVIDIA's revenue growth is being fueled by enterprise customers building large-scale AI models. But how is the market reacting to these results? Let's take a look at what top analysts are saying. Wall Street analysts have been quick to respond to NVIDIA's earnings, with price targets reflecting both optimism and caution. Morgan Stanley, price target, $950, maintains buy rating. Goldman Sachs, price target, $1,000, bullish on long-term AI demand. Citibank, price target, $820. Concerned about high valuation. While most investment banks are bullish, some analysts worry about NVIDIA's stretched valuation. The company's P/E ratio is now above 45, raising concerns about whether the stock has run too fast. On social media platforms like X, formerly Twitter, and Reddit, discussions are heating up about NVIDIA's long-term growth potential. While many retail investors see NVIDIA as a must-own AI stock, others fear that we may be in an AI bubble. So, could NVIDIA face a market correction in the next 6-12 months? To answer that, we need to analyze the broader AI industry landscape. NVIDIA isn't the only player in the AI semiconductor space. The competition is heating up as rivals race to capture a share of the booming AI market. AMD launched the MI300X AI accelerator, a direct competitor to NVIDIA's H100. Google, developing custom TPU chips to optimize AI computing for its own ecosystem. Amazon introduced Trainium chips to reduce cloud AI costs and lessen dependence on NVIDIA. While AMD's MI300X offers high memory bandwidth, NVIDIA maintains a crucial advantage: its CUDA software ecosystem. Over 90% of AI developers rely on CUDA, making it difficult for competitors to attract customers away from NVIDIA's platform. The next 6-12 months will be critical for NVIDIA's continued success. Investors should closely watch the official launch timeline for the Blackwell AI chip, NVIDIA's ability to maintain dominance in the AI server market, how much of a threat competitors like AMD and Google pose. From a technical perspective, NVIDIA is at a key inflection point. Key technical levels: support level, $820. Resistance level, $875. 50-day moving average, $815. Investment strategies: for short-term traders, consider buying near $820, adding to positions if NVIDIA breaks above $875, with a target of $900 plus. For long-term investors, continue holding, as NVIDIA's AI dominance still presents a strong growth story. Despite its strong fundamentals, NVIDIA faces several potential risks. High valuation could lead to a market correction. US-China tech war. Export restrictions on AI chips could impact revenue. Rising competition. AMD, Google, and others are ramping up efforts. However, the company is adapting by focusing on enterprise AI solutions and expanding partnerships in Europe and the US. Investors should keep an eye on Federal Reserve's interest rate decisions, impact on tech stock valuations, AI demand growth trends. Will AI adoption slow down? Competitor product launches. Will they disrupt NVIDIA's dominance? We've covered a lot today, but now it's your turn. Where do you see NVIDIA heading next? Do you think NVIDIA will reach $900 or even $1,000 this year? Drop your thoughts in the comments below. If you enjoyed this deep dive, don't forget to like, subscribe, and hit the notification bell so you don't miss future updates. Thanks for watching, and we'll see you in the next episode.